Good afternoon, this is Sean Golding with Golding & Golding, here to discuss some of the tax precautionary measures to be taken by green card holders, permanent residents, once they gain that status. Why? Because once a person is considered a green card holder, then the tax implications of being a U.S. person for tax purposes can change. Let's work through it. So let's start out by explaining a little bit about the U.S. tax system. Unlike most other tax systems across the globe, for individuals we're talking about, the U.S. uses a citizenship-based taxation worldwide income model. Now, it's not limited to just citizens. It includes permanent residents and foreign nationals who meet the substantial presence test. But what it does is it requires individuals to report their worldwide income on their tax return. Most countries only require that of people who are residents of that country. So in the U.S. tax system, you could be living in a foreign country and you could be earning all foreign-sourced income. But if you're a U.S. citizen, a permanent resident, and you met the substantial presence test, then you are subject to tax on your worldwide income. In addition, there's various international information reporting forms that a taxpayer may have to file for their bank accounts, investment accounts, securities accounts, pension, life insurance. So there's a lot of reporting that needs to be done, and there's many different forms, different threshold requirements for the different forms, due dates, how you apply for an extension is different. Some of the various annual tax forms include the FBAR, the Form 8938, the Form 3520, and the Form 5471. So when someone is going to become a green card holder, it kind of changes the game. Why? Because if they hadn't met the substantial presence test before, then now as a green card holder, they too are subject to U.S. tax on their worldwide income, unless, of course, they're living overseas in a treaty country, and they could make an election to be treated as a non-resident. Let's go through four of the most important tax issues for green card holders. First, should you even become a green card holder, right? For a lot of people, they want to become a green card holder because they don't want to keep renewing their visa, depending on what they have. Do they have a B1, B2? Is there a long wait list to get the visa depending on the country they're in? Things like that. But with that said, once you become a green card holder, especially if you're living in the U.S., you're going to have infinitely more complicated tax returns and international information reporting forms and things like that. So one question is, should you become a green card holder? And if not, should you remain a visa holder? You know, with the B1, B2 tourist visa, typically that can go for 10 years, up to 6 months at a time. Some taxpayers will come here on an F1, and then they get a limited amount of time to not be taxed on their worldwide income. With a visa as well, if you do happen to meet the substantial presence test, you can typically avoid it by showing you have a closer connection with a foreign country or foreign countries. Unless, of course, you already applied for the green card, then that doesn't qualify. Before considering whether you want to become a green card holder, one thing to consider is your foreign income taxable in the foreign country? Let's say you are living in Australia and you're getting superannuation and there's no tax on the distributions, right? It's taxed when it's in there growing, unlike a 401k, but it's not taxed when it's distributed. Now, let's say your children live in the United States and your children are about to have grandchildren. Congratulations. So you're like, I'm going to come to the U.S. I'm going to live here. I'm going to get the green card, keep it simple. And then suddenly your superannuation is going to be taxable. And you probably can't claim that you are a non-resident for tax purposes because you're living primarily in the U.S. So you may want to consider, well, we're really only coming to the U.S. 3 to 4 months out of the year. You know, if I stay below the substantial presence test threshold, then I can avoid being taxed on my worldwide income. That's something to consider. Another thing is a lot of people are private, right? People don't want all their information out there, and maybe you're not ready to file all these international information reporting forms, especially if you're not going to be living in the U.S. sufficient amount of time to meet the substantial presence test if you didn't become a green card holder, and you remained a visa holder. You know, it's very intrusive, especially if you have a significant amount of assets and wealth. You have to report all of that, your foreign business, your foreign investments, right? Maybe it's a family company. You're the only U.S. person member. You don't want to do that, right? So you want to think about the total landscape of the reporting that you have to do if you become a green card holder, and are you really ready and comfortable to do that? So some additional key issues to keep in mind is more for people who became a green card holder and now they may be regretting it. Why? Because of the infamous exit tax. So it used to be that only U.S. citizens could be considered subject to the exit tax. Unfortunately, that was modified around 20, 25 years ago. So there was a second category, and that's green card, long-term lawful permanent residents. Green card holders who have maintained that green card in 8 of the past 15 years, doesn't have to be 8 full years, and didn't make a treaty election to be treated as a non-resident for tax purposes during those years. So what I mean by that is, let's say you had the green card for 10 years, but for 5 of those years you've made an election. Well, then you're not going to be a long-term lawful permanent resident because for 5 of those 10 years you qualified as a non-resident for tax purposes. As a long-term lawful permanent resident, now you have to travel down that expatriation road if you want to give up your green card and you're considered a long-term lawful permanent resident. It's not as simple as submitting your I-407, like if you only had the green card for a few years. The main question will be, are you considered a covered expatriate? There are 3 tests to consider whether you'll be a covered expatriate: the tax compliance test, the net worth test, the net income average tax liability test. You don't want to be a covered expatriate. If you become a covered expatriate, you could be subject to an exit tax. And that exit tax is not just based on U.S. assets, it's based on your global, worldwide assets. So you came here later in life, you became a green card holder, you have significant assets and wealth overseas, you never repatriated it to the United States, you're tax compliant in the foreign country, you may now have a significant exit tax implication when you want to give up your green card. So before doing that, you want to plan. Should you become a green card holder? Should you not become a green card holder? And if you do become one, is there a way to plan within it so that you could start making treaty elections to be treated as a non-resident alien during that time? People come to this all the time near the very end and they go, oh, I want to start doing it now, but there's a tripwire. And that tripwire is, if you file a treaty election, 8833, and you're already considered a long-term lawful permanent resident, well, guess what? That's your expatriating act. So you got to be very careful with the planning. You should be very cautious before getting the green card if you may be subject to exit tax, and you'll want to kind of do that plan beforehand to see whether it's really worth it. If you've got the green card and you're out of compliance, you haven't been filing your annual information returns and reporting foreign income, the IRS has developed various amnesty programs to assist you. If you're willful, there's the voluntary disclosure program. If you're non-willful, there's many programs to streamline procedures, delinquency procedures, or reasonable cause. We got a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.